Rohr here with an early global view on Friday, November 28th, 2014. It's currently 6 a.m. U.S. Central Time. We're coming to you a bit early today because there is much to discuss in terms of the interesting influences and market reactions around all of the asset classes, and most especially the extensive drop in oil prices after Thursday's OPEC meeting failed to produce any compromise on cutting production. And first of all, welcome back to all of our U.S. viewers from your Thanksgiving holiday. We hope it was a good one. And when we ask what does this mean to the markets, in fact, the S&P 500 is very importantly down 5 today, at about the 2067 level. And that's important because of a couple reasons. One, we know that 2070 is the topping line on the weekly chart. It moves up to 2075 next week. Looks like the market might be trying to escape by closing right up around the previous high from the gap higher a week ago Friday. That occurred on the back of the People's Bank of China rate cut and aggressive QE talk from Mr. Draghi at the ECB. It matched that high going back to Tuesday and backed off, but looked like it might be trying to keep the bid to escape in spite of that weak day to Wednesday. Kind of bad news is good news. But the lower opening, if the market stays weak this morning, which is going to come, is going to be back below 2070, important on the longer term view, and also as the aggressive up channel that included that gap higher from Friday. Now, as we noted previous, there are important lower supports around the congestion down into the gap from last Friday's close at 2062. So it's, 2064 to 2062. More gap support in the mid to low 50s. But if the market should end up, and this is the key, below 52, closing off the runaway gap on the daily chart from last Friday, then it might be in for more weakness. Now, we can point to a series of lower supports, but mid to low 50s are going to be the key for the short-term trend. You'll also note that even with the sideways churn and attempted strength, the hourly MACD remained below the upper runaway band, and that's always a sign, even with some price strength, the market might be vulnerable. And that pretty much does it for the short-term view of the S&P 500.